Hello everybody and welcome to the market briefing for the weekend. Today is Sunday, September 25th. We're going to take a look at the markets. We're going to quickly remind everybody what happened last week, and we'll see if there's any setups. I think this will be an interesting session today, so let's get into it. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, so now we got that out of the way. Go smash that like button. And if you're not a member of the Discord, check out the link below in the description and join us in the Discord. We've got a great group there, and you get to see these videos a day or two early. And you get to see a bunch of ideas that we talk about here, or a bunch of ideas that we don't talk about here that you get to only see in the Discord. So it's worth checking out, and hope to see you there. All right, let's move on and see what we've got for earnings this week. Not a lot until Thursday. There's a bunch of interesting stuff on Thursday and really not much the rest of the week. So on Thursday before the open, we've got Bed Bath & Beyond, which will be closely watched by many people, and we also have CarMax, which I think is also going to be fairly closely watched. Rite Aid I'm not so sure about. And then after the close on Thursday, we have Micron, one of the semiconductor companies, and we also have Nike, which will definitely be closely watched. So that's Thursday after the close. And then Friday morning, Carnival Cruise Lines. And this is, I believe, the first of the cruise lines to report for quite a while now. So I guess they're reporting sort of early in the next earnings season. So this should be interesting too. And I think that, this potentially sets up some plays in that space, both in cruise lines and airlines. So this may be, especially for the short-term traders amongst us, there could be some really nice setups after Carnival reports, because all of its peers will probably go the same direction. So that's our earnings. Let's take a look and see what we've got coming up on the macro front. Now on Monday, no real economic data on Monday, but there's a bunch of Feds. So the blackout period is off because we had the FOMC meeting last week. The blackout period is now over. They can all go out and talk, and man, are they going to be busy this week. I haven't listed them all, but they're all speaking like almost every day this week, and a lot of them every day this week. I've just highlighted the days where Powell is speaking, but Monday there's at least 3 or 4 Fed presidents speaking. On Tuesday, we have durable goods orders. That's an important economic number. And again, I think with a lot of these numbers, we're going to want to see things come down a little bit. We want to see some slowing in the economy, which also should mean a slowing and a reversal in inflation, which is what we're all waiting to see, because then. That brings us closer to interest rates coming down. When interest rates come down, the market will go up. So, okay, durable goods order on Tuesday. Consumer confidence, another important number on Tuesday. And again, we want to see that come down a little bit, but not too much. We don't want the consumer freaking out, because that will freak out the market. And we also have new home sales on Tuesday. Powell is speaking. I think this one was something to do with digital currencies. So probably not a market-moving type event, unless you're in, crypto. On Wednesday, we have pending home sales, and Powell is speaking again. On Thursday, we have final GDP. So this would be a second quarter GDP, and this is the final revision of that number. So now that we're getting the final number for Q2, it means that we're not that far from getting some Q3 numbers. Now, obviously, we're not at the end of Q3 yet. We got another week to go to the end of the quarter, but it does mean seeing this final GDP means we're a few weeks away from getting the preliminary GDP number for the third quarter. which will really kind of, prove whether we're actually in a recession or not at the moment. If you remember, we've already had 2 quarters of declining GDP, which is usually the benchmark for calling a recession. Okay, also on Thursday, as always, we have unemployment claims. On Friday, we've got core PCE price index. And you should know by now that this is the Fed's favorite inflation measure. And if you listened to or watched Jay Powell's press conference on Wednesday, you would have heard him talking about PCE and core PCE a few times on Wednesday. So we know for a fact that Jay Powell is going to be watching this particular number closely, which means we should be watching it closely because the market is going to be watching it closely. So a really important number on Friday is probably the most important thing happening this week. And then we also on Friday have the University of Michigan consumer sentiment and consumer inflation expectations. So busy week for macro data, which means that it's probably going to be a very volatile week in the markets. Much like last week was. All right, let's get into the market. So we're going to take a look at the major indices. We're going to take a look at some important commodities. We're going to take a look at some sectors. We're going to see if there's any nice setups. I've also got a little bit of breadth data that I want to look at really quickly. But I want to start off though. I want to look at this chart again that we showed last week. This seems to be playing out almost perfectly as it's shown here, and we're somewhere here, probably there. I think right at the bottom. Whoops! Right at that little dip right there, right where my arrow is pointing. I think that's where we are right now. And you can see that maybe there's a little up move and then there's another down move. And that is my opinion of what's going to happen. And not only because of this chart. Seasonals can be a really good guide, but it's just an average, right? But I have other reasons for being still continuing to be a little short-term bearish, but medium and long-term bullish. And we'll get into some of that today. So let's start with the S&P 500. And there we go. Sorry about that. All right. So this is SPY representing the S&P 500. You can see we had a terrible week, but you already knew that. The downtrend has accelerated this week. And it really got moving to the downside on Wednesday, with the Fed. After Powell's press conference, on Wednesday, we talked about this on the Ticker Talk on Wednesday, but intraday, after his Jay Powell's press conference ended, it ended, near the high of the day, and unfortunately just fell apart once he was done speaking, which was really unfortunate, and set this off for the next few days of a lot of downside. Now you can see on Friday, we came very close to touching this pivot low, or the low from June, which was at 362.17. I think we are low on. Yeah, we were about maybe a point and a half away from that on Friday, and bounced quite nicely. So that can look fairly positive to people, and we'll see a lot of charts with this hammer-like candle. On some charts, this hammer-like candle is green. We'll see a lot of charts where we've seen a bounce exactly off this June low, and that could make you quite bullish. I'm not there yet. I wouldn't be surprised at all, and I think this is probably likely that we do bounce tomorrow on Monday. Maybe we come up, maybe we even close this gap, but I think it's short-lived. I think if we look back at this chart, I think that these 3 days here, remind me quite a bit of these, 4 days right in here. Now, obviously, we didn't drop anywhere near as much as we did here, but the price action seems kind of similar. The volume pattern is quite similar. The candle that it ended on is quite similar. And you can see it was followed by, and I wonder if that was actually a Friday or not. No, it wasn't. You can see that it did bounce the next day, gave us an indecisive candle. That's when we then came in, had a couple of big gap down, and then another indecisive candle. And that's the day that we put in that low in June. I would not be at all surprised to see similar action to that. I think that this market needs to be scared. People need to finally capitulate. They need to think that this is going down a lot further, and we need to cut through this June low and then bounce. I would love to see a horrible, as much as I hate to say it, I would love to see a horrible down day. Let's say we did tomorrow go up, and then the day after that we came down to here, and then the day after that we undercut, and then went right back up again, all in the same day. I think that sets us up for a rally. I think we've got to undercut this here. I think people got to freak out. I think people got to maybe get a little bullish tomorrow and thinking, they're going to miss out on a nice run. And then they start freaking out as we go down. I think as long as we hold this 352.57 level from, this goes way back to, where was that from? September of 2020. A nice little cluster of support and resistance here. I think as long as that level holds, we will be fine, and I think it would be healthy, and then that would give us a bounce, and I think that that's a bounce that people would buy, because I think the traders have been doing this for a long time. Won't be buying this tomorrow. It's just too easy. It just is too obvious. I think that it is going to get bought, but it's also going to get sold. I think that people are going to use that as an opportunity to get out of their positions. I may be wrong about that, though. Maybe this really is the bounce. Maybe this really is the bottom. It is much too early to say. It is definitely a potential reversal candle that we've seen today or on Friday. But the jury is going to have to be out on whether that really is the bottom. And like I said, I don't think it is. But we'll look at some more evidence, and maybe you feel differently. And if you do feel differently, then you're going to be seeing a lot of nice setups in these charts. And if that's your bias, that's fine. You should probably take advantage of some of these setups. But I also think that you need to be careful and be really willing and able to sort of flip on a dime, because I think that some of these setups could fall apart. But not for long, though, because I think that we have enough catalysts coming this week that we could see a strong bounce. And if these catalysts sort of line up in the right direction, there's enough of them that a bounce could continue. So that is the SPY. I also wanted to look intraday here. Some people may talk about this, really strong reversal late in the day. So we're looking at a 50-minute. Actually, I want to go to the 5-minute chart. Big chart in the middle is 5 minutes. We had a strong reversal intraday. It was late in the day, though. Started at exactly 3 o'clock. Which is very suggestive that it's algos. People like to turn on their buy. It's amazing, actually, that people will turn on their buy programs exactly on the hour. Exactly at 3 o'clock. They've programmed their buy program to turn on. It seems almost silly to me that they do that, but that's what they do. And you can see that here, big buying, into the close. Now, I don't think, so a lot of people see that as bullish, and I don't. And the reason is that, we've come into Friday after a long, terrible week down. Everybody's short. Everybody's got a lot of puts on, and who knows what's going to happen over the weekend. If you're short, you've made a lot of money this week. If you've got puts, your puts were deep in the money. Why would you hold it over the weekend? So I think this is short covering. I think this is people buying puts back. I don't necessarily see that as strongly bullish. It was a strong intraday move, and it was great. I mean, if you got long in any of this, you did really well as a day trader. But to look at that and say, okay, the bottom is in, I think is incorrect thinking. I think you've got to think more like, what are traders doing here? And really, I think the traders are just covering their shorts. Okay, so let's go back to the daily charts and we'll take a look at the Qs. We see very similar price action. Didn't get quite as close to its June low as the SPY did, but it did give us that hammer candle, even though it's red. But it did stop right under resistance and right at that gap. This is kind of, to me, setting up for failure on Monday. Whether that means, that it opens, near where it closed and goes up, maybe goes up to that gap and fills there. Maybe it goes up and fills that gap and then rolls over. But I think if this goes up on Monday, it is going to roll over. IWM, the Russell 2000. Another, bit of a gappy chart over the last few days. Big move down, of course. And, the reversal on Friday, just like the other indices. And again, this one did not touch its June low. The only one that did touch the June low was the Dow. We never look at the Dow here because I think it's a ridiculously stupid index. But you can see that it did undercut. It did undercut the June low, and I think, yes, it did close below the June low. So that is fairly bearish for anybody who likes watching the Dow. All right, let's take a look at the VIX, the volatility index. Another reason I think that there is potentially more downside. However, you can also see some bullish behavior in this as well. This finally broke through that 28 area and closed well above it. Interestingly, the move up in VIX stopped right at this trend line. We've had this trend line drawn in for ages. Stopped right at that trend line and reversed, but still closed up almost above 30. This is the kind of action, this is what we need to see if we're going to see capitulation in the market. If we're going to see participants get scared, finally give up on their positions, think that everything is over, the world is coming to an end, and they've had it. That's when we can have a good solid rally, and a rally that probably continues, and that's when we can have a little more confidence that the bottom is in. So this is step one in that, in my opinion. I'd like to see this go up a little higher. You can see in June we got up to about 35 when we put that bottom in, and you can see we've had some other even higher peaks than that. But I think that it would be really nice to see this when we're going to capitulate, go up through this trend line, maybe go up to 35, 36, somewhere in there, and then reverse as the market reverses. That would be another really good sign of a real capitulation flush. All right, let's look at the 10-year yield. This is interesting, and I think the bulls will like this. So on Thursday, we had that big up day for the 10-year yield on Thursday. On Friday, we gapped up and then came down through the day. So that is definitely something that the bulls can look to and say, aha, well, maybe yields are starting to roll over here. Now, it's only one day, but that is something we should be watching. What else? Let's take a look at the dollar index. Oops, let me just bring that in here. All right. You can see that the dollar had a massive day on Friday. It was up. What was the percentage here? Yeah, up over 1.5%. I mean, that's just crazy for a currency, especially the dollar. You can see that the uptrend line, or the uptrend, is accelerating again. This is starting to look, though, like capitulation to the upside. Okay, and again, that's potentially another sign that the dollar is about to roll over. If they're capitulating to the upside here, we could maybe see this roll over, and we need to see this roll over if we want to see equities go up. So a rally in equities has got to correspond with a move down in the dollar. The dollar going up like this is death for equities around the world, not just U.S. markets, but global markets as well. So this has got to stop, and there is a chance here, I think. I mean, this is starting to look like capitulation to the upside to me. So that's hopeful. But again, does that happen tomorrow? Does it happen this week? It's really hard to say at this point, but I think we're getting close to it. Let's take a look at, while we're here, I also want to take a look at, so this is the, here, let's do this over here. Okay, cool. All right, this is the percentage of stocks above their 50-day moving average. And you can see now we are actually lower on Friday than we were in the June low. Slightly lower by about 0.5%, but that's fairly significant. When when readings get this extreme, we have reversals, and you can see that right here in the June low. So that we've come down this far. This is again another sign that we are very, very close to capitulation if we have not already seen it. It's one more sign that a bottom is either in or near. Now that may not be the bottom, but we're looking for a bottom first. So that's definitely a good sign. And let's look at the put-call ratio. Again, a very extreme reading on Friday. And when we've seen that in the past, if we look here, right, in June 13th, we saw a very extreme reading. And a couple of days later, we put the bottom in the market. So, or a bottom in the market, that June low. Now, can this get more extreme? It certainly can, and it certainly did. Now, this one here, this big spike here, is the the COVID crash. So I doubt that we're gonna get that extreme. We are seeing a level now in this put-call ratio, which means that they are buying for every call that's been sold, 1.36 puts were sold. Or bought, I should say. So put buying is vastly outstripping call buying, which is bearish. It shows a lot of hedging. It shows a lot of bearishness in the market. Sentiment is really poor. People are buying insurance. We haven't seen a level like this since the COVID crash. Now, should we be this bearish? I don't know. Sure, we're worried about recession and everything, but this seems to me to be a little extreme. And another reason that I think a bottom is near, but I still think we need to just get a little bit more fear in the market, and that means one more flush. All right, so that's put call. What else did I want to look at? Another thing that I found interesting. Actually, here, let's go over here and look on this chart. Okay. This is Bitcoin, and you can see that Bitcoin has come into support. Now, Bitcoin is not looking pretty by any stretch of the imagination. We're definitely in around some lows. You can see here with the June lows here. One of the reasons that I look at Bitcoin, I own some Bitcoin, obviously, but I don't really trade it. I do, though, watch it as a sentiment indicator, as an indicator whether or not sentiment is leaning risk on or risk off. Now, what I found really interesting over the last few days. Okay, let's take a look again at the market. We'll go back and look at SPY, all right, and we'll take a look at what it did over the last few days. Okay, look at this. Look what it did over the last few days. Look how it just went straight down, right? We go back to Bitcoin. Bitcoin was going sideways. So this is interesting because there's been a fairly tight correlation with equities and crypto in general. And when equities have gone to risk off, crypto has definitely gone risk off as well. And we didn't see that, in the last few days, which I find really interesting. And again, perhaps is another sign that a bottom is very near. All right. Was there anything else here I wanted to look at? Oh, we want to look at the our dollar cost averaging system. Okay, you can see that the MACD crossed down below. The MACD line crossed down below the signal line, meaning that with us below the 20-week moving average, the dollar cost averaging system is now in full off mode. We will not be adding to our dollar cost averaging system unless we see signs. If you are just religiously following the system, then you will not add to the system again until the MACD crosses back up through the signal line and price crosses up through the 20-week moving average. That's when it will turn green on both counts. However, if we're expecting capitulation in this market, when we see it, that would probably be a good time to buy. If you don't know what capitulation looks like, though, you want to wait until this system turns green. And we'll have to wait until the end of next week to know if it is going to turn back to green or not. So that's on the SPY. I think we'll find it's the same on the Qs, and I'm sure it's the same on IWM as well. Interesting. Okay. IWM, the Russell small caps, have not, the MACD has not crossed down yet. It will through this week, no doubt. But if there's a capitulation flush and a strong move back up in the index, it's very possible that the MACD could turn back up, and this goes from the warning zone back into green. So yeah, interesting to see that the SPY and the Qs are 100% off, while IWM is just in the warning zone. All right, that's it for here. So let's go back over to our daily charts here. Quick look at gold. It fell apart, broke down out of its consolidation. It's kind of what you expect to see when you see a bull flag. But it didn't, that was a pretty nasty red candle on Friday, but it tried to bounce a little bit. Not even going to look at the miners. They look worse. We'll look at silver. We were looking at the divergence between silver and gold. We were also looking at this kind of flag at half mast. Silver had a horrible day on Friday. We were waiting for a breakout here or a better setup in silver. Because I think when the metals start going again, silver's going to lead the way. But now we're stuck waiting for a decent setup for sure. Nice to see it bounce. We've got this pair of lows right here now, so that's definitely a level we want to watch. You could, if you're an aggressive trader, you could actually short this. These are the silver futures. You could play SLV, the ETF on silver. This could be a good short if this breaks down below these two lows. It's not investment advice. It's just a potential idea for you. Oops. Not sure what happened. I really look at the ETF on this one. That's interesting. The ETF is already broken down below that low. That is quite interesting. Okay. Let's see. Where were we? Silver, copper. So copper, it broke down out of that uptrend that we had been watching with a nasty red candle on Friday. Not surprising that was such a nasty candle. I mean, everybody should have been able to see that trend there. You know, it had been trying to hold, but once that finally let go, not surprising we had a big down day. I'd really like to see this turn back up. You know, copper is a bellwether for the economy, and to see it coming down like this is not ideal. DBC, the General Commodities ETF, that big gap down. Let's actually draw that gap in. Whoops, that's the wrong color. Yeah, big gap down on Friday, and below this major support level. So that is not ideal. A lot of this will be from the energy commodities, though, especially gas, which we'll look at in a sec. But yeah, this is not good. I'd really like to see this get back above our support resistance line as soon as possible. Agricultural commodities. These guys fell out of their upward channel, but seems to have found some support, at least it did on Friday, at the 50-day moving average. Can it bounce from there? It's going to need to if there's going to be any hope for these agricultural commodities. Crude oil. So nasty red day on Friday. Broke through support, broke through that $80 level, which I'm kind of surprised to see, because $80 is where the White House said that they would be buying oil to refill the Strategic Petroleum Reserve. So if they start going into the market, they will definitely prop up price. But will they go in? Will they see this and think, you know, oil's coming down? And you've got to think that going into an election, the farther oil comes down for them, the better. You know, gas prices coming down, Biden's out there, you know, supporting his party. You know, Biden's not involved in the election, of course. It's a midterm election. It's just the Senate and the House. And I guess state stuff too, I imagine. You know, they'll want gas. You know, they want gas prices to come down. That's why Biden's been pulling so much oil out of the Strategic Petroleum Reserve and depleting it down to, you know, multi-decades lows. I think we're down now to, you know, lowest it's been since the 80s or something. It's ridiculous how much oil they've been pulling out of there. It is going to have to be refilled. That's one of the reasons why I am still long-term bullish on oil, although in the short term, this does not look good at all. And if you're still in these energy trades, you know, you might actually be trapped in there. I don't know if you should even be getting out now, because I think that there will be a turn here, but there's probably more downside in these trades. Let's take a look at natural gas. This was where the real damage has been done. You know, it's had just, you know, a couple of weeks of just almost continuous downside here. Coming into the 200-day moving average, though, and you can see that last time it got near there, it did eventually support there. So it'll be interesting to see what happens when we get there, and I think we will go and test this. There should actually be a little bit of support, probably some weak support also. Let's draw that in. Probably some weak support also in that area, coming off of these little pivots right here, and you can see supported there and there. Had a little bit of interaction with price there, but you can see that level, that support level, is right near the 200-day moving average too. So yeah, that could be a turn in natural gas. XLE, the energy ETF. big, huge gap down on Friday, moved right down into a minor support level where maybe it found support. At least it did on Friday. Will that continue to hold, or is there another move down? And I think if the market moves down on Monday or Tuesday, oil may as well, or this ETF may very well move down, especially if we're capitulating. And I could see, this capitulate into this 6650-ish area where we should have some fairly major support. XOP, the oil producers and explorers, very similar looking. We will be watching these two lows right here for support. Let's actually get that in here. So that's, exactly 108. So that's down another 10, almost $11 from where we are now in this. And again, I think it's going to take some sort of capitulation flush to get there, but I wouldn't be one bit surprised to see it happen. OIH, the oil services, these are not doing well either, which is a little surprising to see them fall this quickly. And again, it's really starting, and these ones is really looking like capitulation. I think we need to watch this pivot down here, which was, that's the July low, okay. We could come in, see a test of that, and if that doesn't hold, then I think we're down lower into the, mid 180s on that ETF. Solar also had a rough time through the week. We closed that gap we've been watching. Now I was a little surprised. That we didn't find support there at the gap. However, considering the price action and everything else on through the latter half of last week, shouldn't really be surprised, right? Why should TAN hold up? Why should the solar companies hold up when nothing else is, right? So we were in one of those markets where they were selling everything until Friday. Friday there was a little buying here and there, very limited though, and in some unusual places too. But maybe we'll get into a couple of those. So we closed the gap. Interestingly, we seem to have found support at two areas here. The 100-day moving average. And some people may say the 200-day moving average, right, got close and reversed, but also this downtrend line. We had, I think previously had a triangle drawn in here with this little bit of a downtrend line where it gapped up above from. So interesting to see that where it's found some support temporarily. Let's see if that turns and can move back up from here or not. I kind of suspect we might have to come and test 72 on this one. Some of the individual solar stocks. First Solar. Now it broke down out of that potential bull flag, but reversed on Friday, and reversed right near the 21-day moving average. This could be interesting. I don't really think this is a good setup for now because I think we've got another little bit of a flush coming. But if you believe that candle we saw in the indices on Friday is a reversal candle, is the bottom, then you've probably got to like the look of First Solar as well, and maybe want to aggressively buy this if it can get back up into that flag area, like it can get back up above Friday's high. I won't be buying it there, but I will be watching this through the week. Because I think it has the potential to make a nice move there. Same goes for ENPH. One of the others we've been watching. It fell down out of its consolidation, and it did it with a nasty red candle. But it put in a nice looking hammer here on Friday, right at support, right where it should have. So if that can hold above this 272 level, you can certainly look for a setup in here. Okay, let's quickly look at some of the sectors. We've got XLY, consumer discretionary. Fell apart like everything else, but put in a bit of a reversal on Friday. XLI industrials. These also had a terrible week. These undercut the not only the June but also that July low. I think this is the lowest close. Yes, it is lowest close by a fair bit that we've seen in a while. So what is our close here? About 80, 84, 83. Our previous lowest close would have been 85.64. So it's undercut the previous low by a couple of dollars. That's a little sketchy. But it's got this sort of hammer-like candle like everything else in the indices. Financials. Financials came right down to that June low and bounced. Put in a nice looking hammer candle. But look at the increasing volume, increasing red volume on these things. I don't think the damage is over yet, but it is nice to see it bounce right there at that June low. Pretty interesting, and if you find that to be bullish, if you're a bit of a bottom feeder, I think you'll like the look of Schwab. Now Schwab nowhere near its June lows or its July low. It is, right at the support level. It's supported here a couple of times earlier in the month. We've got that 50-day moving average there. Put in a nice hammer candle. So, if you like the look of some of these reversal candles, I think you gotta like Schwab. Out of all the financials, I think this is the most interesting. And you could buy a move above Friday's high, with a nice tight stop, below this consolidation. But that's not something that I'm going to be doing. Okay. Technology. Now, technology just ever so slightly undercut that June low, but it did bounce nicely. We've got a bit of a hammer here. It's still a red candle, though. But that is interesting. But again, I think we've got a flush coming down below these lows. Communications sector, they undercut the June lows a long time ago, and they just continue lower. But it seems to have found some support at this 49.20 level, or I guess it was a little bit below that. Even where is that? 48.60. This is a level that goes back to during the COVID crash, and then it's supported in the post-COVID recovery. So that is it's good to to see that we've bounced in that level. But do we need to put another level on here? Could be that one right there, actually. What is this? 45-ish. 45 and a quarter. I think we should mark that in. Right off of that pivot right there, or 44.95. Yeah, okay. If we do crash down through here and see capitulation, we may come all the way down to this 45 area. All right, let's take a look at some of our FAANGs. So Meta, okay. So this purple line is the COVID low. Look how close Meta is to its COVID low. Let's just wind the chart back here and just ignore this piece in the middle. I don't know what is going on with this. I don't know why this doesn't get corrected. It was something to do with the split and everything, I think. But just ignore that little bit in the middle, because the rest of the chart is valid. And here we are. You can see that this is the COVID low here, and we are almost right at that now. That is kind of terrifying. Does it continue lower than that? I think if it breaks down below that, it's like lookout below. I think that Facebook or Meta could go into crash mode. So yeah, if you're in this stock, and you probably, even if you if you have any indice ETFs, you're in this stock, you want to see this turn here. You want to see this COVID low support. That is pretty scary. Apple's interesting. Again, this is another check mark for the bulls, I think, because we've got this sort of the support level, minor support level at 148 in Apple, and we had a nice little hammer candle last week, or a week before last, actually. Was that the Friday? Yeah, it was too. On a Friday, after a nasty move down, we supported there. We had a couple of really nice, good up days. And then, of course, on Wednesday we, gave it all back and started another bunch of down days. However, we put in another hammer candle. This is almost almost exactly the same as what had happened the week before. So interesting here to see this again. Do we get another couple big up days? I wouldn't be surprised. And if we're getting up days in Apple, then we're probably getting up days in the market overall. So I think this is really interesting to watch. I think that when you open up your charts on Monday morning, Apple should be one of the first stocks you look at and see what it's doing. If it's gapping up, the market's probably gapping up, and this could make for a good day. Certainly make for a good day at Apple, and maybe make for a good day in the markets if this can continue to move up. Amazon. So Amazon, hasn't come anywhere near its June lows yet. So that's cool. Was there anywhere really that, or should we be surprised that it's found support there? I don't know. I mean, there's, I guess, a little bit of a cluster of support. Definitely a lot of price action, in that area. Will that continue higher? Hard to say. I mean, it doesn't look terribly bullish. Netflix. Netflix refuses to go higher and continue moving higher, and it also refuses to go lower and continue, moving lower. Right? We're still within the boundaries of this consolidation. Our moving averages are all starting to converge on each other. I still continue to watch it. But I'm yet to see a convincing move in Netflix one way or the other. Google, if there is any there are convincing moves here, and the convincing move is to the downside, unfortunately. Now this gap goes back to. You can see now we've moved well into the gap. Got about halfway in and reversed. This gap goes all the way back to, when was that? That was February, early 2021. And you can see that was a fairly important level. When it gapped up there, and it held really nicely. For even through that consolidation for a month and a half before it moved away from that level. This is an important area that we're flirting with now, right? So do we come down and completely close it, or does it reverse and move higher? I'm on the side of this. It's going to come down and close this before it can move higher. Again, I think when we see capitulation, we'll come down out of this gap. But there should be pretty decent support, below that. And I would be surprised if we move down below 90 in Google. And I think I may even be a buyer in around 90. However, for me to buy Google, I really want to see that U.S. dollar roll over. Microsoft, another ugly-looking FAANG stock. Has broken down just in the last week. Has broken down from the June lows. Not looking ideal here. I mean, this is firmly in a downtrend, well below all of the moving averages. It kind of looks like it might be going lower. That was Microsoft. Okay, let's take a look at Tesla. So Tesla, 3 really nasty days, gave back a few weeks worth of price action, or certainly 2 weeks. It took 2 weeks to get up there, gave it back in 3 days. Doesn't look ready to slow down here. Looks like it needs to come down and test this pair of lows here. Maybe even come down and test this gap. So yeah, not looking great for Tesla right now. In the short term anyway. It's hard to be long-term bearish on Tesla, right? Semiconductors. Semiconductors have come down and tested that pivot low, the June, or sorry, this was a July low, not the June low there. You know, there's the June low there. They made another lower low in July. Anyway, tested that level and bounced on Friday. That's interesting. That's hopeful. If you're, you know, again, if you see, you know, if you see this bounce is bullish, then, you know, you want to be looking for plays in the semiconductor space. And, you know, it's giving you some ideas. It's giving you some potential plays in that space. A couple that I find most interesting off of this level are AMAT, Applied Materials. Again, a perfect bounce right off that pivot. Nice little hammer, and actually a green candle on that day. So this is one you might find interesting. I think it's, you know, it's a little scary here, but you know, the way you would probably want to play that is you know, you buy a move above Friday's high with a stop below Friday's low. Nicely risk defined anyway. Micron is another one with a very similar pattern, although it did not bounce off of its July low because it broke through that on, I guess that was Monday. I should actually get that, I want to get that drawn there. Go. You know, and we had looked at these. It's too bad that it broke down through that, because I mean that was such a nice reversal, and it did such constructive work all through here. You know, getting back up before it kind of rolled over again. But again, I think we might be seeing the beginning of some constructive price action. I like that, you know, how green this candle is. I like that, you know, Micron is one of the ones that had a green day, one of the few stocks that had a green day on Friday. So, and, you know, this is fairly bullish. Good volume, too, on that. And we're seeing over the last week or so, even though it's moving down, we're seeing that the green days had a lot more volume than the red days. So if there is a stock here where I might be willing to play the reversal off these lows, I think it's Micron. But again, a lot of risk in this. I'd want to be, you know, very risk defined and I would certainly want to be very disciplined about my stop. I want to have a tight stop, and I want to make sure that that I respect that stop. Okay, let's move on to healthcare. Healthcare is just messy, but again, same sort of reversal we've been seeing a lot of on Friday. Big green volume on that one as well, so that's kind of interesting. But then when I look at, you know, some of the, you know, go a little deeper in healthcare, for instance, into biotech, I don't like what I'm seeing as much. You can see the head and shoulders I've marked out here. And unfortunately, you know, I didn't notice this until earlier this morning when I was doing my scans. I guess because I haven't been paying attention to healthcare, because I haven't liked what I've been seeing there. But I wish I had seen this head and shoulders and the breakdown from it, because I totally would have played this to the short side. I think there still could be a play here. This is targeting basically between the 70 and 67 level on this head and shoulders. Now, you know, we're kind of almost halfway there now. But if the market bounces like I think it might for Monday, Tuesday, this should bounce as well. It'll move up a little bit. Maybe it moves up into the 100-day moving average. Maybe it moves all the way back up to the breakout or the breakdown point here. I think this is going to give us a second chance to get into this trade. I've looked at some options trades in this that I kind of like. And if this continues down, I might just jump into one of those option trades, probably adjust it from what I was looking at this morning. If I do, I will show the trade in the options channel, so that everybody can see that and come in with me if you so desire. And again, not investment advice. You could also just play this, just by shorting the stock itself. But I think we got to wait until tomorrow and see, does the market bounce? Does biotech bounce with it? And if biotech is bouncing, then I think we need to wait until the market rolls over. If biotech doesn't bounce tomorrow with the market, assuming the market does bounce tomorrow, then I think just jumping into the short side, could be a fairly low risk trade. Because I think there would be more downside coming, and you could just use Friday's high as your stop out point. And like I said, if I decide to go with the options, I'll let you know what the trade is in the options trading channel. So let's move on to our defensive stocks. XLRE, nasty, ugly price action over the last couple of weeks. Has a hint of a reversal candle here. I certainly wouldn't buy anything off that candle. Staples outperformed the rest of the market through the week. It did that by going down less than the rest of the market, but still not pretty. Bit of a hint of a reversal candle there too as well. And utilities had a pretty bad week. Better looking reversal candle than some of the other defensives, and it did that after undercutting the 200-day moving average, and into an area, into a volume node where we would expect to see this bounce too. Does this continue higher? Oh, we also had a dividend. Yeah, so some of the dividend coming out of this can be responsible for some of this price action. Not all of it, certainly, but a little bit of it. But does this reverse now? And do we care? I mean, it's a defensive stock, right? I mean, we're not looking, we don't want to see defensives leading the market. Okay, speaking of leading the market, a couple of interesting stocks. This one, Xometry. This is quite. Now you can see this has definitely been outperforming the market. It's in an uptrend, and the uptrend has been accelerating. So it's accelerated to the point where I think we need to be concerned a little bit about this. And we also, we've got. However, we even though we have two red days, we came down to a support area, and this I think is a fairly important support area. I'll just back up a little bit. We can also see that this IPO'd. Last year, just over a year ago, it opened at $68, and that's just above. That can be a resistance level above, which is another level of concern for us if we're going to play this to the long side. Because you can see that shortly after it IPO'd, it just went into a downtrend. So when we get to the 68 level, a bunch of people who had maybe bought this on the IPO day are getting very close to their break-even point. So they're going to be sellers, right? So we do have sellers overhead, but considering how much volume it's done down under here, the sellers may not overwhelm, and especially if this continues higher. Fundamentally, this company is still losing money. However, they have a ton of cash still left over from their IPO. At their current burn rate, they've got 4 years worth of cash in the bank. So that's awesome. They don't need to dip into the well, do a secondary or anything anytime soon for cash, and it gives them cash to fund growth. And an interesting company too. They do manufacturing, but short-run manufacturing on demand kind of stuff. And also U.S.-based manufacturing. So this is good for if you need a part, one single part. or a short run of parts. If your supply chain, say out of China, if you're a company that normally buys out of China, but your supply chain's messed up, this is a company that can jump in and do some short run manufacturing, maybe to tide you over until your big order from China comes. Auto parts and things like that. Another interesting application here is, if for machinery maybe that's getting a little older. If we are going into a recession and you're a company with some older machinery, well, you're probably not during a recession going to want to buy new machinery. But you would pay to have parts manufactured for that machine and have it repaired. Whereas if the economy is better, maybe you would have tossed that machine out and bought a new one. So I think that this company, considering the supply chain issues that are still ongoing, and considering potentially moving into a recession, I think are all potentially good things for this company. And it's not very well known, but analysts love it. The downside here is profitability. Actually, here, let me bring up Stock Unlock for you. We can see, their financial health is really good. The cash runway is fantastic. The current ratio, I don't think I've ever seen one so high. They've just got a lot of cash, right? What else? You can see, their margins are not great. They've definitely got work to do here, right? And they're still, they're losing money. The returns are terrible, which reflects the poor, their poor margins reflected there. Their growth is pretty good. Their revenues are increasing rapidly. Their gross profit is increasing rapidly. However, their operating income and net income and everything is decreasing. I suspect, now I haven't dug really deep into this company. I haven't read any of the 10Qs or Ks. And I really should. This company, it's not a long-term investment. I just see swing trade opportunity in this. But I can see this turning into a long-term investment, potentially. Because I suspect they're spending a lot of money on growth, and that is not paying off for them yet, but will start to pay off soon. And you can see that analysts really like this projected EPS growth, over 50% revenue growth, projecting high revenue growth and EBITDA. And the analysts are giving it a fairly high rating. So, there is some decent tailwinds for this company that could propel it higher. I just want to see a good setup, and I don't see it yet. And I certainly don't want to be buying it tomorrow. I want to see a flush in the market. I want to see the capitulation that I'm expecting, and then I want to see a decent setup in this. I might not get that good setup, or maybe I do. Maybe this flushes down, hits this 21-day moving average, or maybe hits this slower uptrend. I would like to see something like that, and then I might be interested in going in this. But it's certainly something I'm going to keep an eye on, and if you're more aggressive than me, if you're more bullish than I am in the short term, this is maybe you want to find an aggressive entry in this. And you'll probably get a better entry, or you might get a better entry than I will. This is definitely going to be one that I'm watching fairly closely. Snowflake, I think, is potentially a interesting setup here. You can see that Snowflake has had this this nice upward channel since the June low. It's been very well behaved in this channel, series of higher highs and higher lows. We are right down now at the bottom of that channel. We also have the 50-day moving average right there. We did cut below the 21-day moving average, though, when we came down to the bottom of the channel. But I think this is a really interesting spot. And again, these are trades for somebody who is short-term more bullish than I am. If you think that the market turns up, that Friday was a bottom, and we're going to turn up and we're going to, rally nicely, well then, Snow is probably going to rally nicely as well, and certainly up to, certainly up to this resistance level, and maybe farther up to the top of the channel again. That could be a nice setup for you. It could even be a nice setup for me if I do see the capitulation, because when the capitulation happens, this probably comes down to around the 100-day moving average and then bounces from there. So this could be a stock that I could see myself getting into on a capitulation in the market. And finally, another one actually that was nicely green on, or had a, not nicely green, but had a green day on Friday, and was one of the first ones to turn green, I think, is SCHW. I'm not buying any down here. It's still too sketchy for me. It had, it's recently broken, really important support level, and is still below it. But on a move back up, I just found the price action on Friday quite interesting in this, and is one of the few stocks that was green on Friday. All right, I think that is it for stocks that we want to look at. Let's go back over here. All right, so coming up through the week, where are we now? What day is it today anyway? Well, I think it's the 25th, isn't it? We're coming into the end of the month. That's right. We are coming into the end of the month and going to leave horrible September behind us soon. On Wednesday, we're going to be doing Ticker Talk, and I have no doubt we are going to have a lot to talk about on Wednesday, so I'm looking forward to seeing you all there. Okay. Thanks everybody for watching. Hit that like button. Share this with your friends and subscribe if you haven't already. And we will see you all again soon. Hope you all enjoy the rest of your weekend.